Kevin's going to be proud of me. I'm back on the coffee. Hey, ladies and gentlemen, fellow traders, welcome back to the live show. We're back for another one. Another great day trading. I'll go over a few things today, but today I'm going to harp a little bit on stop loss. I'm going to go over that quite a lot today. Hope you're all here. Hope you're all going to enjoy it. And I'm going to go over some of the comments, some interesting stuff, some questions. Some interesting topics of discussion. There was one particularly about stop loss, which was very interesting. The markets have been interesting because, with the geopolitics and all that in the background. So it's been a really interesting week, of course. Guys, before we get going, don't forget, trading is risky. Most traders lose money. If you don't like risk and you don't like losing money, you shouldn't be trading. Probably not the thing for you. There was another one about a guy who wanted to leave his job, become a full-time trader. That's an interesting question. Very interesting question. But the news has been quite interesting this week, so I'm going to go over that as well. We'll go over the news. We'll talk about a few things that have been happening in the market. I hope you guys have all been trading well. So, Brewman, you're back. It's good to have you back. Fantastic. Paul, hey, Rob, good to have you. Good to see you again. Yeah, the market stinks. Yeah, well, at the moment, you see, everyone's gone into this mode of waiting to see what happens because there was such a lot going on. And then you got these huge moves as a result of all the geopolitics. It's on, off again. And at the moment, it's just got into this lull, into this sort of like, what's next? That's what sort of convinces people to drop off the long time frames and start trading those 5-minute, 1-minute time frames again. And then it zaps all your money and then you start again. But the big thing is, guys, is to understand that, perhaps something like this will help you understand that charts cannot predict the market. Charts cannot predict the market. All that charts can do is help you manage your trade, or help you manage your risk, or help you look for a high probability trade in the market. So it's not like you can take price action and say, because I'm using this on my little squiggly lines, that the market's going to do this next, it's going to happen next, like you've got some kind of crystal ball. It just doesn't work that way. It's 50-50, whatever you do. It just helps you feel better when you take your trade. You need to use the strategy. The strategy is the important part of your trade every single time. And if you use the strategy and you manage your risk using these lines, then you'll probably be okay at the end of the day. How's it, Greg? Good to see you again as well. Good to see you. I'm just going to jump over to the other side, to the news and that. And I just want to show you a few things. I just want to go over a couple of the nice comments and stuff and answer a few questions based on that. So I'm going to take us there quickly. And we'll just go and have a quick look. There's all the news about Donald again. But mind you, I am being a bit biased here. This is Yahoo News. Let's be honest. This is clearly American news. But now he's going to get rid of the Fed chairman, Powell replacement. It is better when you're trading the markets to follow the US news, because the US kind of leads the markets at the end of the day. And if you're going to have investments anyway, you've got to have them in America as well. NVIDIA, I'm so chuffed with that. I mean, considering what we just went through, considering all the noise and hassle and everything, I mean, if I look at my investment portfolio, I'm so chuffed. It's unreal. It just keeps on growing. It's fantastic stuff. But that's where the money is. Like I've said to you guys before, you can't time the market. It's time in the market, and that's what's important. Reddit vows to stay human to emerge a winner from AI. Trump closer to naming Powell's successor. China tech giants. Yeah, it's all interesting. Also wrote, hey Rob, I just discovered your channel yesterday. Where have you been hiding all that time? Well, I have been around on YouTube for a year and a half with you guys. So I guess it takes time for YouTube to put me out there so you guys can find me. I don't know. We're trying our best. We're trying our best to get out there and to spread the word. Spread the word, as we say. and get the information out there. But you know, you actually, it's crazy that I actually started this, because like I said before, I literally started this channel because I was kind of bored with when I was trading, and you get bored trading, watching little charts and things like that. And if you haven't got another thing going, then what do? So I go to the beach, go shopping, go do this, go hang out, go to lunches. Yep. You need something to do. So yeah, I started playing with YouTube because I like technology, and now we're a year and a half in, and look where the channel is. It's doing really well. And yeah, eventually guys will find us. I wanted to go over a couple of nice comments. And this particular comment struck me. It sort of hit me in the heart, where I remember my first time going live, lost 25% of my account because I moved my stop loss a couple of times. In one trade, I hung the hat up real quick, and that account is still where I left it. Apparently there was more to learn. No replay bar can prepare you for the live thing. This particular client, I think it was this particular person, it ended up $40,000 down because they didn't take their stop losses, because they stopped taking their stop losses. If I remember correctly, I never move a stop loss. I started a few months ago. It's definitely volatile. Crazy moves. Take your over-exaggerate. Scary when you not have a business plan. Cheers, love the content. That wasn't this particular guy, but there was a particular chap who mentioned that he actually stopped taking his stop loss because every time it hit his stop loss, the price would go up. And it kind of affected him in a way that he looked at it and he thought, every time this thing hits my stop loss, the price goes up, and there's something wrong with this whole scenario. So he stopped taking stop loss. And now he's a few months in, and his account's now $40,000 down, and you can't get out of the hole. And yeah, that's what normally happens. And then you start holding on to those losses. It's funny how you'll hold on to a loss. You'll always hold on to a loss. So now he's back to taking the stop losses and managing the risk and that sort of thing, which is seriously important. Yeah, how's it, David? I think, you know, these alerts and things like that, you can't rely on it. It seems to be a YouTube thing. Sometimes even on my side, I see things go funny, and I don't know what, they're in control of it all. So, you know, what can you do? Greg, that was me. Yeah, Greg. Yeah, you know, I don't want to mention names and things like that, but yeah, it was you. You know, that sort of that hit home. And I'll tell you why it hit home, Greg, is because something very similar happened to me many, many years ago. You know, where I also became discontent with the whole, you know, stop loss thing and all that. It's a long time ago. And I took heavy losses from that. And I learned my lesson. Dollar cost averaging, moving the stop loss down, not taking the stops. It took a long time for me to get the aha moment. I must say, I'm not, you know, I'm not a genius. And yeah, it really hit home. And then there's the other chap that did mention that he wanted to leave his job and start going full time. And the one thing I got to tell you guys, if you're not full time and you're going full time, just understand this clearly, and that is, your psychological level is going to increase twofold. It's going to be twice as difficult to trade when you don't have something covering you. In other words, the buck stops here, and you have to make income and you have to make money to survive. It changes everything. You know, it's always good to have some kind of sideline. It's always good to have another business on the go. So through the years, I used to do that. I used to have things on the go on the side that would cover me. So any money I made from trading or investing went back into the markets, and it was pretty good. But the minute you need to use it, the minute it needs to become the thing that pays your bills, it becomes quite a complicated issue. Hey, you guys will notice I took the buy and sell buttons off so that I don't click them by mistake because I keep clicking things. But what you got to ask yourself is, what do I want from trading? What do I actually want from trading? What is it going to give me? Am I doing it for money? Am I doing it because I love doing it? It's fun. I like all the screens and monitors and charts and computers and things. Or is it going to give me freedom, from having to, that ball and chain, get up and go to work or whatever the case. And then you have to make a really conscious decision as to what it's going to do for you, because it can become more difficult. I've worked for myself since I was about 27 years old. I left the big company and I just went off on my own because it was always my dream to do that. At the same time, I was investing in the market because it was a thing that I liked, got involved in. But I learned very fast that when you're working, you look forward to the weekends, you look forward to Friday afternoon, you look forward to for example, holidays and that sort of thing. And then the end of the month was great because your salary was coming through that you could blow. And suddenly that all swaps around. You start to hate holidays, you start to despise the end of the month because you're paying rather than getting paid. And when holidays come around, they're just taking income away from you because everything's standing still. So you start to change your mindset quite quickly, and it can psychologically affect you in a really big way. And you have to be prepared for that if you haven't actually done your own thing. G'day, hi Bruman. Hi, I wish Bruman. For the Lambos, obviously, I'm doing it for the Benjamins. The Benjamins are the one you got to do it for, that's for sure. So we'll have another draw today. We're going to have another draw today. And I'm going to use the last video. I'll show you which one. Well, actually, the one we were looking at now. And but just remember, any cynical comments or nasty comments or bad comments will be, they will be taken out and we'll do another draw. They're not going to, the only people that can win or get the giveaway are people that are supporting the channel and people that are positive and want to learn trading. I'm not giving it away to people that are nasty or bots or anything like that. So that you must understand up front. So if somebody like that actually wins the draw, they will not get it. That is part of the rules. I've put it in the description below as well. Just by the way, out of interest. So this is for like-minded traders. And it's kindly donated by Fundra FX. So it's not from me anyway. But by the same token, I made the rules. Okay. 42%. That's quite serious, Bruman. That's quite a lot. Because I was looking at Bitcoin earlier, actually BTC. There we go. And that didn't look too bad. I mean, so I don't know what happened to Bitcoin. As long as you shorted, that's good. Because I've just been looking at Bitcoin and thinking, will this go short? Yeah, it's always good when you actually make a profit off of something. That's quite decent. It doesn't matter how big the profit is, as long as it's a profit. But that's another thing I wanted to allude to as well, is when you're trading, and particularly when you're full-time, you have to actually figure out how much you want to risk. How much do I actually want to risk, and how much do I want to put in there? Because if you put too much in, you won't sleep at night, or you'll do what I did at some stage. And I was getting up at 2 or 3 o'clock in the morning sometimes and checking my trades because I was too deep in. So don't get yourself too deep in, because that can affect your psychology, something horrific. Let me tell you, be very, very careful of that. But it is important to note that these charts that we trade on are just for high probability. They're not there to predict your trade. This cannot predict your trade. What it can do for you, you see, you're looking at this, and this is the Nikkei, for example. You're looking at it and thinking, well, there's a resistance that we put in on the day chart. And then in your mind, you're thinking, well, obviously it's going to go down. And it's not obvious. You see, it can't predict that it's going to go down. All it can do is tell you, well, it's been trading in that range for a while now. So in all likelihood, it'll probably come down, but it might not. It might break through and go the other way. It's 50-50. So this is not predictive. All it is a helpful hand in guiding you along the road to how you want to manage the trade. Because if you take the trade, then what you're doing is you're saying, well, I'm going to take the trade here in the knowledge that it could go against me and it could go up to here. So I'll put my stop loss there, and with the knowledge that it might go down here, and I'm hoping for a take profit. But if it goes to there, I understand that that could happen. And then you 50 steps ahead of just about most of the traders in the market, because they don't believe that. They think they have the edge on the market. You know, how many retail traders out there think they're moving the market? How many retail traders out there think that they're somehow so important that people are looking for their stop losses, take profits, whatever the case? We are so minuscule in the market. We are such a small percentage of the market that the pros don't even care what we're doing. Our money that's in the market as retail traders would not support the pros in any way, shape, or form. So even if they took 100% of all the retail traders' money, that would not be enough for them. Effectively, the big money trades with themselves. We trade on their coattails, and that's it. So when you're trying to time the market, just remember, all you're doing is looking for the liquidity that they've put in and looking for what they're going to do and how they're going to react to the markets, because you're going to ride on their coattails. You're not going to ride, they're not going to ride on your coattails, that's for sure. You know, I've spoken to so many traders out there, retail traders, who think that they're somehow going to beat the pros. They think they're somehow important to the pros, and so not true. Good show, Andrew. Good to have you. Unless you are ICT, Rob, then the algo comes for you. Blue Mango, you're going to have to be more sort of less cryptic about that one, but yeah. You know, at the end of the day, you know, the algo, you know, we talk about the algo. The algo is a fun one to talk about, because a lot of people in the market, especially retail traders, believe that the algo is coming for you, and it's looking for you, and it's looking for your trades, and so on. And if you started trading when I did, Stone Age, a long time ago, there was no algo. There was no computer in front of me. I used to pick up a telephone with a dial on it and phone a guy, a broker on the floor, who would do my trade for me. And they would do the old shouting thing and do the buying and selling. It wasn't like it is now. So algos came about later on with computers. Now, of course, there are now algos in the market. But what you have to understand about an algo is who put it there in the first place. It's programmed by a human being. It's put there by a human being, and it's not infallible. The other thing an algo cannot do is it cannot listen to what's happening on the outside, like Donald Trump changing his mind every 5 minutes. It can't hear that. All it can see is what's in front of it in charts. Now, an algo can be somewhat successful in a stable market, because it can be trained to take profits and buy trades at certain points in a system, and it's not controlled by emotion. So it can work, but it can't hear what's going on the outside. So when the market is destabilized, which is pretty much more than often, as you've noticed if you're new to trading, it's very seldom that the market remains in a stable condition. which is what makes the market 50-50 in the first place and what works on your emotions. So very often these algo trades tend to fail or work in somebody else's favor rather than yours. So be careful of those. They, like I say, it's not that they don't work every time, but pretty much it's not a great way to entrust something like that with your hard-earned dosh. Rather learn to do it yourself. But algo is hunting out your stop loss, coming for you. Look, if you put your stop loss in place or your take profit in place and you leave it there automatically, then clearly you've advertised where you want to sell your trade. Clearly. I mean, that's fine. And if someone is coming along and gobbling up all the liquidity to buy or sell the trade, and your order happens to be in there, it's going to swallow it up. It's not specific that they're looking for your order. It's just that if it's there, it'll swallow it up. It'll take it because you put it there. You said, I'll take that money for that trade, and you've advertised that to the market. And there's someone out there that's willing to take that trade for you or to take that product. It's like buy and sell, you know. They're not specifically hunting out you, but you know they're looking for liquidity to take their trade. And it's not an algo that's doing it. It's normally a rather big pro firm that's looking to buy those products. When I say the big boys are in a tug of war with each other, you must remember traders are always, see here, Greg, are always trading against each other. We trade together, we're a community, but they trade against each other. There's a winner and there's a loser when it's trading. And look, if you're investing in a company, that's a different ballgame because you're growing with the company and you're leaving your money there and you're letting it grow. But when you're trading, like, for example, betting on Forex going up or down or whatever the case, commodities, indexes, that sort of thing, then it's not a zero-sum game. Never. Because it would only be a zero-sum game if everybody was right or everybody was wrong. In other words, if every 100% of us said we're buying the S&P 500, it would be a zero-sum game because everybody would buy it and it just wouldn't work out. You need someone to buy and someone to sell. Someone needs to sell it. So that's why it becomes 50-50 because it's like any trade. There needs to be a buyer and a seller in the same game for it to be effective. In other words, by definition, if you are right, then I am wrong. That's how it works. Somebody has to be right and somebody has to be wrong for it to work out. That said, it's the big guys that are making the markets move because they got the big money and they are more than 95% of the market. Sounds strange, eh? But they are massive in comparison to we are. You think retail traders are massive because you see them all over the place, all over the world and all that. We make up a minuscule part of the market. We are not important. But it is a portion of the market, and it is there, and we are allowed to trade in the market, and that's what it's all about. It was mainly put out so that we can invest, so that we could make our own choices and our own investments, and freedom of choice and that sort of thing. And it got a little bit out of hand with a few strange things going on in the world and leverage trading and all the rest of it. But if you're sitting there believing that as retail traders we're so big we can do anything and move the market, then you deluded, because at the end of the day, when something moves, it moves because of the big institutions, because they're moving it. Okay, so this person, Flatter Uncle, interesting name. Nice. Flattest Uncle 7. That is great name. Love it. As a first-time profitable trader, a new problem is how to go about withdrawing profits Do pro traders withdraw 25 or 50% because we still want to be able to compound our account? So here's what I always say about profits. Now, don't relate this to pro traders. Just remember, when you're talking about pro, we are not pro. Retail traders are not pros. Pros are the institutions. You must remember what the institutions invest for. Pension funds and for other people and for big companies and whatnot. So they're not taking profits out and putting them here and putting them there. They have to be invested. A certain amount has to be in cash, and a certain amount, without doubt, has to be invested. They can't be holding cash. Otherwise, how can you provide an amount of profit back to your client? So for the pros, different ballgame. But for retail traders, what I always say is, if you have an account size and you've decided on the account size, now I'm not talking about investments here. I am now talking about trading, because investments is time in the market, and there you just add and add and add and compound and compound and compound, because you're investing in companies and that money is growing over time, 30 years, whatever the case. So you're growing that money. So that is a different subject. We put that aside. That's where most of my money comes from, is that side of the business. The trading side is more for, it keeps the blood flowing, keeps you going, and you can have a bit of, profit out of trading. Now, profit in trading is completely different, because you're dealing with leveraged accounts, brokers, things like that. So what I always say with leverage trading and trading accounts, brokers accounts in that sense, is if you create a $100,000 account, then that's what it should remain until you consciously decide to change it. So in other words, if it becomes $110,000, take the $10,000 out and leave it as a $100,000 account. Or even if it loses a couple of $1,000s, always see it as it's a $100,000 account. So when you're choosing your 1% risk, you're choosing your 1% risk on a $100,000 account. Keep it there and review it on, say, a monthly, 3 monthly, 6 monthly basis. Say, well, I'm not happy with it now being a $100,000 account. I would like my account to be a $125,000 account. Then you can change it to that. And then keep it at that. Withdraw your profits, take your profits out. Brokers are not banks normally. And although they will pay you interest, I would rather trust either a share account, which is in my case normally the case, or a bank with my hard-earned money, than some leveraged broker who, in most cases are, the one I've been dealing with here in South Africa, where I'll deal with a couple, but the main one has been around for many years, 30, 40 years. You can tell when you're dealing with a reputable broker, but by the same token, do you want to leave your money with a broker? In all likelihood, not. So what I always say is, try and keep your trading account your trading account. You don't want to compound your trading account. You want to compound your bank account, or your investment account, but not your trading account. Your trading account, you want to use a certain amount for trading. That's your cover, that's your leverage, that's what you're trading with. That is what you use to make money with. Keep that the same. If you feel you're much wealthier now and you can afford more and you're more comfortable trading larger amounts, then you can increase that, but keep the account size the same. I hope that answers your question. That is Uncle 7. Okay. Want a good laugh? Check his videos. I will. I'll have a look at your videos. What's your account about? Tell me about it. I haven't watched your videos, but that is Uncle 7. Please do tell us about your account. That'll be interesting. And if it's good, I'll definitely come along and perhaps even subscribe. Good morning, sir. Thoughts on US dollar, Japanese yen, time to buy? I think I was looking at that earlier as more of a short. I don't have it on here, do I? US dollar, Japanese yen. Let's go down here. See if we can find it down here. I know I was looking at it earlier on There we go. It's at the top because we normally... No, it's not time to buy just yet. Okay, I wasn't looking at this one. I was actually looking at the JAP 225. Whew, that level is quite big. Okay. These are your main levels between the two. Let me just make this a bit smaller and see what we got. And that's why I'll give you your answer. You know, is this a time to buy the US dollar, Japanese yen? No, not yet. I would wait. I know you can draw a trend line through here if you want to, but I would wait for it to get down to this main support level down here. You see how many times it's hit the support level. Maybe look for a buy off this level down here. At the moment, it's in a bearish trend and it hasn't broken structure to the upside. What you can do is you can take a short-term trend line like this one, just draw it down there. And if it breaks through that to the upside, then you can start maybe looking at the possibility of it going up within that area. But at the moment, it's bearish. It's not ready to buy just yet. Tim North, if you are new to trading, stay away from that specific pair. Evening, Rob North. Shane, how's it going? You guys will be proud to know that I'm drinking coffee again. I was born a pro, lol. Super Earthman, how's it, man? Earthman the pro. Yeah, sitting there watching the lines. I'll tell you what, Super Earthman, if you start trading on the lower time frames, you'll be sitting there watching the lines 12 hours a day. You'll be getting up at 2 in the morning just to have a look at the lines and see what's happening. But yeah, that's why I started trading on the higher time frames very early on. And it keeps me sane. Then I don't have to look at them all the time because it will drive you insane. But it's also boring. I mean, come on, it's crazy. But you know, the best laid plans of mice and men, the guys on the 5-minute time frames will go in and say, I'm going to make $200 a day. I'm going to make $200 a day. I'm going to go in, I'm going to work for 2 hours, and then I'm going to go. And I've made my $200. I'm going to go down the beach, go and have a bit of fun. I can't go down the beach at the moment. It's a bit cold. It's winter here, and it's raining, and storms are coming over. Cape Town's getting battered. But it's fine. It's quite nice, actually. I enjoy it. Anyway, besides the point, people think they're going to go in, make $200, and then go and enjoy themselves. And the problem with that is it's very presumptuous because you're presuming that you're definitely going to make $200 every day, aren't you? And then what happens when you don't, or when you lose, $400? And so what do you do then? Do you after 2 hours say, oh, well, I've lost $400, shut it down and go? Or do you try and make that money back and then you don't because you lose $800 and you sit there for 12 hours, it doesn't work out. Now you come back the next day to make $200, but you lost $800 yesterday. So, ooh, bit tricky that, isn't it? Because now that's not going to be a good week, that. So, you get what I'm saying here. That doesn't work. Never works. You end up sitting watching the charts all day. Believe me, I've been there, seen that, done it. It ain't going to work. It's not going to work, is it? Hi, Rob, come in late. Maybe you answered this already. How do you reconcile placing a trade as 50, but in order to be profitable over the long term, a trading edge is needed? Thanks. I'll get to that now. Risk reward losses only lose 1%. Best winners win 2%, for example. Totally. That's great. Thanks, Tom. What time frame are your charts on, Rob? They're on 4 hours. NAS 100. Thanks. My thoughts exactly. Coffee with a splash of rum. Gosh, rum. I haven't had rum for a long time. Would be good though. These days I like a good gin. It's nice. You will start in the lines. You're right, addicted at the moment in long journey. I've got the gym. Okay. News incoming. What time frame do you use? Expensive news incoming. Yeah, don't want those lines, that's for sure. Okay. How do you reconcile placing a trade as 50-50, but in order to be profitable over the long term, a trading edge is needed? We're going to cover that But hi Rob, great content education. What's your favorite instrument to trade? We'll cover that as well. Okay, here's the big one. Everybody always asks the question about the 50-50. You guys that are part of the team here for a long time obviously know my answer to this. So you're just going to have to watch me repeat myself again because you guys know. Why is a trade 50-50? Okay, so if you go and you look at any trade you want to, let's take this Great British Pound Canadian dollar, which has broken to the upside. Now, a trade is 50-50 on this chart because a chart does not have a predictive capability. Price action does not have predictive capability. Any indicator that you use in the world does not have a predictive capability. All it allows you to do is manage your trade, take a high probability trade, manage your risk. So you have to learn to separate the charts, from the business plan and the strategy. That's the difficult part for everyone. I know that because you've been told different. You've been taught on courses that you just follow these lines and you'll just make money. But it's not so, because none of these lines can predict the future and predict what it's going to do next. But what it can do for you is draw a line in the sand, allowing you to manage the trade. So, for example, you saw this break through the resistance and you thought, wow, that's a great long trade. I want to take that long trade. So now what you get the capability to do is say, I'm taking a long trade here. I want to take profit up here, and I want to manage my risk down here. Of course, you must manage your risk first. So first we look at where do we want our risk. Okay, so I'm going to say my stop loss is here, below the level, which is going to come back and retest. This particular trade, I did actually say this morning, it'll probably come back and retest, and we might get a nice long trade out of it. But for the time being, we look at it as high probability that it's going to go long. And maybe you didn't wait for the retest, so it's coming back to retest. So you put your stop loss down here. You manage the trade. This is now strategy. Now you've moved over to strategy. You're not on the lines anymore. What you're doing is you're strategizing. You're saying, if it gets to that level, I don't want this trade anymore. Then you're basically working into your strategy. And now your strategy is, I want my stop loss there. My stop loss is $250. How many points can I take? How many lots can I take up to the cost? You take the cost, you buy it long, and then you see if it reaches, if you can make a take profit out of it. Is there room for me to make a decent profit out of it? So now you're working on your strategy. But the lines themselves are 50-50. You can't guarantee for sure that if you buy this trade, whether it's here or whether it's here, that it's going to continue on and make you a profit. All it can do for you is draw a line in the sand for you and give you the probability of a trade. If you didn't have these lines on the chart whatsoever, you would take the same trade and just manage it the same way. The lines are only there like a book. It's like reading a book, because what you're doing is reading what the market's doing, what all the other traders are doing in the world, where the money is going and where the money is moving to. And that's how you read the charts. You must learn to read the charts like a book. But they don't have predictive capability. They can only tell you what's happening. They can only tell you where things might be going, were going, because human beings are creatures of habit. They might do the same thing again. So this is how we look at 50-50. The chart itself is 50-50. Your strategy is where you make the money. And the strategy is simple. It's to make more on your wins and lose less on your losses. That's how it goes. You can sometimes look at charts and find patterns that, because we're human, we're creatures of habit, you can find patterns that maybe give you an insight as to what might happen next. But predictive capability, no chance. That's not true. It doesn't happen. If you don't believe that, it's okay. I get it. It takes time for that aha moment to strike you. It took me many years to get around that. Believe me, it took me such a long time to get around the fact that charts don't make you money. But eventually you do, and you figure it out. Okay, so okay, my favorite instrument to trade. So Buck asked me, "Hi Rob, great content, education. What's my favorite instrument to trade?" And I gotta tell you guys, I don't have a favorite, and because your favorite changes all the time. I've been through stages where maybe the DAX was my favorite, and then that falls away, and the S&P 500 is my favorite, and that falls away, and then the Euro US dollar is my favorite, and then that falls away. My favorite trade is the one that's working. My favorite trade is the one that's actually going to give me something at the end of the day. So for at the moment, my favorite trade is I like Brent crude oil because it seems to be doing something. It doesn't matter to me. I'll go through stages where I might trade gold. But you see, with me, I'm the type of person, I'll trade orange peels if they're tradable, because the strategy remains the same no matter what you're trading. The strategy always remains in place. What changes is the instrument and the chart. That's all that changes. So I don't have an actual favorite instrument. I do have a few that I always gravitate towards. For example, the US 500, S&P 500, the DAX. There's a few, Brent crude oil, the JAP 225s, the Aussie dollar, US dollar, Canadian dollar, Euro, Great British Pound. You kind of gravitate towards them quite often, but further than that, no. Hey Rob, what indicator do you mostly use? And that's a wonderful question. What indicator do you mostly use? None. I don't use indicators. I used indicators in the past. Most indicators are lagging indicators. In other words, it's already happened by the time you take the trade. So no, I don't use indicators. What I use is support and resistance and trend lines, and sometimes a bit of supply and demand to help me manage my trading. I don't need that, but it helps me manage my trading. It helps me understand where the market levels are. But I don't need indicators at all. If I was going to use any indicator whatsoever, you can see here on Brent crude oil, I used the Fibonacci. Shane, you'll be so proud of me. I used the Fibonacci, but why did I do that? Because I couldn't really see much on the price action because of this vast move. There was a vast move after the geopolitics played out. And I was looking at oil and thinking, I've got to get back into oil. Where am I going to get back into this? And I can't really see the picture. Struggling to see the picture. Draw a fib in. There you go. It's in the golden zone. Gotcha. So that's what I'll do. But that's not a favorite at all. And then if I was going to choose any indicator whatsoever to use on my charts on a regular basis, it would either be volume or the RSI, the relative strength index, because it just gives you the relative strength of anything. But yeah, that's it. World Free Speech, good to see you again. What do you think it looks? MCI, do you think it looks strong? The talk is that the stock is headed for newer heights, like 100 or 130. Time to sniffle up. Lol, clown show. Okay, this guy who says clown show is one of our negative, cynical followers. Yeah, he's not worth his salt, and we don't want him, so he's being removed. I saw his comments on the channel, and he's a real ass. So no, just one of these guys that wants to, I don't know, insult other YouTubers or insult people or carry on. I don't know why you get people like this. Good luck to you, China. All the best with your life. Just go away, People really. I just sometimes, I'm not a genius, but I just seriously can't deal with stupidity. It annoys me, you know what I mean? Yes, Bruin, I'm hearing a lot of positive and good things coming. Wait for the break and retest, 6% down. Thanks for the answer, Rob. Orange juice had a big drop this week. A lot of people trade orange juice. Funny, I don't trade orange juice, but I would. But yeah, I heard, where's the guy that trades orange juice all the time? I think he's with IG or something like that. Ooh. Okay. Aren't supply and demand the same as support and resistance, Rob? No, No, supply and demand and support and resistance slightly different. I'll show you now, Super Earthman. It's 5:30 in CA. What time is it? Where you at, Rob? Here it is at the moment 20 to 3 in the afternoon. Pretty proud of you, Rob. In Fibs we trust. You can trade OJ on IG actually, Paul. IG has got orange juice. You can trade it there. Oh gosh, yeah, no, totally. They actually orange juice is available for trading there. But you can trade it just about anywhere on cash accounts. You've got no problem there. On supply and demand, I just want to quickly show you, Ari, the difference between supply and demand and support and resistance, guys. Chop while we're here. So that's a resistance level which we've taken over time. You see here, that's a resistance level that we probably took from the day chart. That's a support level that we probably took from the day chart. The reason that's a resistance level is because every time it gets there, 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 it's coming back. So we understand that there's a lot of liquidity there because every time it gets there, it gets pushed down by the big money. And at the bottom here, you can see that there's a support level, and every time it gets there, it gets pushed back up again. So that's why that's support and resistance. But what is supply and demand? Supply and demand you can use on a shorter scenario. So for example, you're here on the 4 hour and you're looking for a level where there might be money. What that normally entails. Now from the top would be a supply and the bottom would be a demand. It's just terminology. What it is, it's money and it's money, okay? Don't worry about terminology. Terminology is not going to make you money. It's just going to give you a headache. This, they call it a demand level, right? So what it normally is, there's your red candle, and then there's 3 big green candles after it. In this case, 4, 5, doesn't matter as long as there's more than 3. It's a bit like a trend line, as long as there's 3 points. So there's 3 candles after it. Then what you got is this is a demand of money, what you would call maybe a supply of money, right? So what that is your level where if this was to come back, it would probably come back to this level and take that money. Now, why is that? Because at that point, the money pushed hard. It pushed hard away, because you can see by the candles, the money pushed hard away. So it left some money behind here. There's probably orders at this level where the sales were, and that's what you're looking at. It's going to come back and take that money and go. And the same goes on the opposite end of the spectrum. For example, here, there would have been some money at this level. So you'll clearly see here, if I just want to change this color so you can see what I'm doing. But if you go to this level here, you see there's 3 red candles. There was a green candle before it, and that would have been a supply of money. So you see here, it came out of there. It went back, took that money and went down. Came back, took that money again and went down. But it's not a strong level. You see the 3rd time, it just breaks through it and goes. So that's what it's about. Okay, so supply and demand is different to support and resistance. Just so that I hope that kind of helps. If it doesn't, just ask again. Okay. All right. Okay, if someone is continuously entering too easily, should they when you say, all right, I've got a tickle in my throat now. Hang on. Ooh. DMS, when you say a smaller time frame, are you talking about a shorter time frame? Like, let's say you're trading on the 4 hour, you want to trade on a 5 minute. Just remember, the lower the time frame, like if you drop down to the 5 minutes, 99% of traders lose money there because the information on the candles down there is more unreliable. But you can use dropping time frames to pick your trades out. So you can say, take a trade and say, well, on the 4 hour, it looks like this. On the 1 hour, it's still bullish. On the 15 minute, it's still bullish. Well, 30 minute, and on the 15 minutes, still bullish, and go down and see what the trade looks like. But just remember that each candle becomes more and more unreliable the lower you go down the time frames. You can do that, but if you're trading on the lower time frames, you are going to trade much faster, much higher risk, and 99% of traders do lose money there. You have to have a very special psychology to do that. So yeah, when you say try a smaller time frame, I think what you're trying to say is look for the sniper entry. You can do that. You can look for the sniper entry if everything is in confluence. In other words, if it's bearish all the way down or bullish all the way down, and you're like everything is bullish, then you can look for that entry in the lower time frame. You can go all the way down to 5 minutes and say, will I, should I get in here? It doesn't always work though. It doesn't always work. If you go to the lower time frame, you are in all likelihood going to enter too early. When you say you're entering too early, if you're dropping to the lower time frame, the chances of you entering too early are even higher than if you didn't. Because when you go down to the lower time frame, you're going to see more entries and think, wow, I'm going to get in there. So maybe it's not a good idea. Rather wait for the candle to close on the higher time frame and get in there. Probably a better idea at the end of the day. Okay. I'm on IC markets. Just check OG is there. Yep, all OG is there. Oh, goodness. Breaks through supply, no more unfulfilled orders left. Yes, Greg, that's correct. So when it breaks through the supply or the demand, there's just no more unfulfilled orders left in that area. You see, the support and resistance is that much stronger, Greg, because the support and resistance is very much a longer term level that you can clearly see in the market, that every time it gets there, it pops off. Every time it gets there, it pops off. Whereas the supply and demand is a much sort of weaker area. It just sort of pushes suddenly, and then there's orders left in that area that it's probably going to come back and take. But the support and resistance is stronger because even your big guys are looking at that area as an area of note. It's a notable area. And then another thing to look out for is round numbers. Human beings like round numbers, like a 6,000, a 5,000, a 5,500. People don't like 5,498.5. Then people don't compute with that. People compute with 5,500, for example. So watch out for round numbers as well. Round numbers are quite important in trading when you're looking at price. Just is what it is. And you're never going to change that. That's human beings. As soon as you start to see that it's not charts, it's not robots, it's not algorithms, there's human beings behind it, then you'll start to see a bigger picture. Bruman, do you mostly trade crypto? Of course, Bruman trades crypto. It's all he trades, crypto. Bruman, do you trade anything else, by the way? I know you trade crypto, but do you trade the other stuff as well? But it doesn't matter what you trade. It's all the same. As long as you separate the strategy from the lines. Same thing. That's how it works. Exactly how it works. Do you think support and resistance on the 1 hour is sufficient? Support and resistance on any time level is sufficient. It just depends what your time frame is and what you want to trade and how you want to trade it. But yes, it's sufficient. There's nothing wrong. It will work 100%. There are certain things that don't work, like average true range doesn't work on higher time frames. It just doesn't. It works on lower time frames. But if you're working on the higher time frames, then the support and resistance works really well. But it works well on the lower time frames as well if you want to use it. If you want to use it as a base, supply and demand works really well on the lower time frames, that sort of thing. But as I always say, the funny thing about us wanting to trade on lower time frames and 5 minute time frames, things like that. And believe me, I've been there, I've done it, sold a t-shirt a few times. And you get onto the lower time frames because maybe you're bored and you're looking for something to do, so you start trading faster. Thing is, why do we think as retail traders, who are the minuscule part of the market, do we think that we're now going to somehow go and beat the pros on that kind of trading? It boggles the mind how we think like that. how we think we're going to be part of the 1%. And it's not easy. There are one or two people that can do it. It takes a really special kind of mindset to be able to trade on a 5-minute chart and make money consistently. It's easy to make and win a few trades, scalp a few trades, make a bit here and there. But you know how soul-destroying it is to work really hard, win 9 trades in a row and think you're a genius on the 5-minute charts, and then the 10th trade wipes out all those wins, everything, just gone. That's soul-destroying, and that happens more often than you think. And if you think it doesn't happen, just go and try it out. It happens. I don't know anyone who doesn't get around that. And oh, sorry, there is one person I know who can get around that, who trades 5-minute charts successfully. But you can't copy that. You can't copy another trader. You can learn from them. You can pick up information from them. You can understand what they do and try and follow along that way. But you're going to have to work out your own style, let's say, with regards to how you trade. You're not going to be able to just take somebody else's way of trading and just carbon copy it. It won't work for you. You can take what I do and take a few bits out of it, and take what somebody else does, take a few bits out of it, and put it all together and work out what works best for you. You get all these guys like trying to show you things and whatnot, and saying, just do this and you'll be successful. It never works. Never works. You've got to find your feet, and it comes with experience and a bit of time in the market. I trade everything. John B. Futures, one thing you must understand about me, I do not discuss my income with anyone because it's dangerous. And most of it's made by investments anyway, but it is dangerous. That I seriously keep to myself for many, many reasons. And those guys out there that boast about it and carry on, I made $200 and I did this and I did that, probably all BS anyway. Look, at the end of the day, it's not my thing. I'm just here to help you guys and make you competent, and really ain't going to discuss that. It's bad enough, that you have to deal with just the taxman alone, but besides people trying to scam you and take your money and get hold of you and get into your bank accounts and all these kinds of things, and people will do strange things to get money, and you really, it's like if you win the lotto, don't tell anyone, dudes, don't tell anyone. It's not good. It's dangerous, okay? Dangerous for anyone to know. And it's actually stupidity to tell people. I rather don't. I rather never do. Sorry about that, but that's just me. It's just how I think. Maybe I'm wrong. Maybe I'm completely wrong. Maybe I'm an idiot, but yeah. Shane, you're right. Yeah, it is. Yeah, Tom's the only one that I know that can do it. Yeah, there's a few of you guys here that kind of agree with what I said. Yeah, totally. And John, just remember that. Remember that for yourself in the future. Don't tell people. Okay. People will kidnap your children for your money. Okay, just be very careful. All right. Bruman, what's in your bank account? Dust. A few crumbs. What else is in my bank account? Some greedy banker trying to get some commissions. That he's in there for sure. I see him every month. I'll have that bit, and I'll have that bit, and I'll have that bit, and I'm pretty sure the tax man's in there as well. He's digging around, trying to get his share. Who else? Let's see. Yeah. I've blown about 10 G's on trading. Okay. Bitcoin. John, let me tell you something interesting, okay? And you guys will find this amusing. I've made millions and I've lost millions, and luckily somewhere down the line came out in the positive. Okay, so believe me, it all looks great and it can all look bad, and you go through the ups and downs in life. So yeah, it's easy to say, look what I made, and then they never show you what they lost. It's always interesting, isn't it? Always interesting. But yes, 10 Gs is a lot to lose. And that's why I say I'm not here to make you rich overnight. I'm not here to tell you how you can make 10 grand next week or whatever the case. I'm trying to keep you guys competent. I'm trying to keep you guys consistent and try and make you a consistently at least a break-even trader, if not a profitable trader, that you're not throwing all the money away in the market, because that's generally what happens to new traders. Is you jump into the market and the sharks are just waiting there to grab it. They'll take it. They'll take it with pleasure. You know, have you seen, for example, last week was a really good example. This Brent crude oil was a really good example last week, when everybody in the news was saying, and you have to suspect this sometimes, everybody at this point, when the market was up here near 80 bucks, okay, at this level, the news was screaming that oil is going to go to $150 because this is going to happen with the geopolitics and that's going to happen. And you know how many retail traders probably put all their money in here? And this is what happened. It came crashing down. Now, someone with my years of experience would not play that game, and I didn't. I'm playing the game here. I'm looking at this and thinking, this looks like it could go further. I get that. But I'm looking at it, this looks more like a level I'll play with. I'll play it. It's almost like they're trying to suck you in. And that's what happens to the new traders. You get sucked into it, you think it sounds good, and then you lose your money as a retail trader. They're very good at that. Very good at getting hold of you. Yeah, it's paying school fees. Paying the school fees, expensive to pay the school fees. We pay the school fees, you know. Yeah. Bruman, yeah, Bruman, do you show all your crypto ones to the tax man? Yeah, come on. I wish my losses was only 10 Gs when I started it. Thanks. Yeah, both of you. Yeah, I wish my losses were only 10K in the beginning. Yeah, totally. Oil is too risky at the minute. I tweet from dump your wrecked. One dump your wrecked. Yeah. Hey guys, so lunch a lot. Yeah. Oh no, totally. There was a time when I lost $1 million account, and I tell you what, it's painful. It's painful. That was a baddie. How do you get it back? It takes a lot of work. It takes a lot of work and a lot more investment. But yeah. WITI. Hello there, Rob. How's it? Good to see you. Any questions further? Oh, yes, we do have to have the draw, don't we? I almost forgot. We still got to do a draw here today. Would somebody like to win the 2-step 10K challenge account? Anybody here interested in that? Shall I do a draw? And this Funder FX has given us another one to give away. So we'll do another draw. Okay, let me show you guys which video so that you can get involved. There we go. Let's do that. Let me find it for you guys. And I'll go and show you which video it is. That's always the fun part. And yes, Kevin, $1 million. Long time ago, and a long time ago, it was my company's money. It was my business, but yeah. Copy this trading strategy and blow up your business. Pretty much, I think, the last video. Ooh, I look like a psycho there. Copy this trading strategy and blow up your business. That's the one we're going to pick. And as I say in the rules, if it's a cynical comment or a nasty person, they ain't getting it, because I want it to go to one of our community who's interested in trading and like-minded and so on. So if it's somebody who's like, oh, you're an arsehole, then I'm not going to give it to you. No, forget that. Okay, right. So that's what we're going to do. We're going to pick a random comment, and somebody here is going to win. Hopefully we'll be able to contact them, because I see a lot of the people don't put their emails on their accounts and don't put their names here and stuff like that. So it makes it difficult for me. So if you are on the live show when I do the draw, let me know. It's going to be important. It's going to be important, so that we can get your gift to you. Let me just open this on the side here. I've got to get everything ready so you guys can get the draw. Dom. Okay. But I can't go. All right, shall we have a look at that? So we're going to pick it from here, and we'll take it from there. So I hope you guys are in. I didn't comment. Right, so okay, so you guys are in. You guys are into the win. That's great. Ruman cheated. He wrote 2. That's fine. And obviously I can't win it as well. You know, the first comment on every video is me, where I leave the free Forex book there for you. And the one time we actually did the pick, I won. But I took myself off and let you win, obviously. Ooh. And then they'll get hold of you and they'll give you your account and all the rest of it. ZA Swift, you got a comment on there. If you've got a good comment on there, that's great. As long as you didn't call me any nasty names and you weren't bad to me, then you stand a chance of winning. But like I say, you got to be part of the crowd to win it. Obviously, bad people ain't gonna get it. But I got to say, 98% of the comments are good. I got a 98% like rate, so I'm not too upset. There's only 1 or 2 people out there that are really, I don't know what they are. I don't know what to call them. It's funny how people are, you know. I don't know if it's caused by some kind of jealousy or some kind of nastiness, or if they just grow up that way. You know, why do they want to pick on other people? It's insane. You know, you get people, I prefer to help people, and I prefer, if I see you succeed and I see some happiness in you, it actually makes me feel so good. It's a bit like when I used to get sweeties as a child. If I see somebody, if I can help them out of a hole and make them feel better, that really is rewarding. It's very rewarding. What reward do you get out of trying to be nasty to other people or hurt other people? It's kind of weird, eh? It's kind of strange. Or kind of trying to destroy them or bring them down or make them look bad. Or I don't see any reward in that whatsoever, to be honest. It's the weirdest thing. Oh gosh, if I had to hand out sweeties, you know, that's one thing I struggle with, is handing out sweeties, because I'll eat them all myself. It's terrible handing out sweeties, but yeah. You know, but you know, have you ever, I don't know, have you ever had someone that's really hungry on the side of the road and you give them something, you know, that look in their face of happiness that they got something from you? It makes you feel good. It's rewarding. I don't know how people can be nasty and pick on others and whatnot. There's actually people out there that make videos that talk nasty about other YouTubers and things like that. I don't get it. I actually don't get it. I don't know what can be rewarding about that, apart from the money they make. Obviously, they make money off of the the videos, because I see those guys get hundreds of thousands of subscribers and views. You know, we get like a few, and we're like, ooh, you know, we've got a few people watching and whatnot. They get hundreds of thousands. That seems to be the popular thing. To be nasty is popular, I suppose. Yeah, Andrew Foster says a lack of maturity, but they obviously make a lot of money out of it somehow, because they get hundreds of thousands of views and they do really well, and they get lots of popularity from it. I don't know what it is though. A fan with sweeties. Come here, little girl. Well, I can just picture you now, Bruman. No, let's not go there. Hey, Rob, create a funded account at your fund your FX. All I got to do is pay the $150 fee or the test of some kind. Diago, if you go to the fund your FX and you want to create an instant account, you can. But you can also buy challenge accounts where you have to do the test, go through the process. But they do have instant accounts available for those of you who just want an instant account. And then there are slightly different rules as to the drawdown. So just read the rules, okay? Just read the rules on the drawdown and that sort of thing. Let me just see here. All these people and whatnot. There's different rules. So the rules are further down here, and you get different instant funding, 1-phase valuation, 2-phase valuation. They cost different amounts, and they've got different drawdown rules and profit sharing rules and all these things. So just go and read the rules, okay, and get to know it, okay. Then you'll be okay with that. Okay, I'm going to do the draw because I'm really dragging this on now. After I've done the draw, I'm going to lose all my viewers on. Are you all going to run away after I've done the draw? Bring the beer. Okay, take the video, copy, and we'll do a random draw here, paste, and let's see who wins. Okay, like I said, it's got to be a good person, so it only loaded 56 to 90 comments. Sunny6684, great nugget. Is that a good or a bad comment, guys? Okay, now this person has won the draw, and the comment is great nugget, so I don't know what it even means. But yeah, if they're here, let me know, and I shall organize for you. Otherwise, I'll have to get hold of you, and hopefully your email address is on your account, and we can get hold of you. Okay, don't worry, that's the winner. There we go. Sunny N6684. Sunny N6684. He's won. Comment doesn't look that bad, does it? Okay, there we go. We'll go with that. That's great. Perfect. Sunny N6684. Okay. The winner. Today's winner. I shall get hold of dude, and shall take it from there. Okay. Hopefully we can get hold of him. Perhaps he's not on the live show, and if not, we'll have to look for him. Sunny got cloudy. Yeah, we'll just have to see. We'll have to see if he pitches up and if he comes through or whatever. I always normally hope that they have an email or somebody has an email on their account. If they don't, then what I'll try and do is just leave a comment saying, you won, contact me. But further than that, can't do much else, can I? We shall see. Congratulations, Sonny. You are the winner. you've got yourself a 2-step 10K challenge account. Hopefully we can get hold of you and you weren't just passing through. You know, sometimes people are just passing through, watch the video, off they go, and they get to be the lucky winner. And yeah, we shall see. Everybody gets a chance. Oh, Bruman, thanks, man. Thanks for hanging out. 76 minutes already. I've been here that long. Goodness me. Just enjoying myself too much, aren't I? Blue Mango, my live show schedule, I try and keep it as simple as possible. Tuesdays, 1100 GMT plus 2. Thursdays, 1400 GMT plus 2. Why the different times? Because I'm trying to catch most people around the world. So, you know, this is more for the US session. Tuesday is more for the Euro session, and anybody in between. I just do the 2 a week, the 2 live shows per week, and keep it at that for now. Yeah, actually, Andrew's right. I should draw it from the live chat, but I don't know if you can. But yeah, I should probably just draw it from the live chat. Probably better in the long run. I'll see if I can do that next time, Andrew. We'll see what I can do. Bruman, later, dude. See you, dude. Have a good one. Cheers. I normally stick around till about 3:45 here, GMT plus 2. If you want to work out that time, just go on Google, just say that plus 2, and then it'll tell you what your time is around the world. Everybody's got a different time zone. Yeah, you know, it's difficult. I try and give everybody a fair chance to win. Well said, Kevin. Ruman's ducking because he didn't win the account. Told you guys will all run away afterwards. But actually, I'm looking at the concurrent viewers, and you've actually, it's still quite good. There's still a lot of you still here, so that's okay. We'll deal with it. We'll deal with it the best way we can. Let's actually get back onto the subjects and start talking about a few things. Let me just see. Yeah. That's 2:30. Yeah, but Kevin, the UK is a difficult one for me because it keeps changing around. It's either 2 hours behind or 2 hours in front, or 1 hour in front, 1 hour behind. Yeah. It's normally 1 hour or 2 hours. At the moment, it's 1 hour. So you're 1 hour at the moment. But that'll change to 2 hours at some stage. I'm glad you thought it was the most interesting 80 minutes on you. I'm so glad that someone said that. I'm glad you guys enjoyed it. Bruno Shane's Shane's still here. Shane's still here. Even though he lost, he's still here. But, you know, Shane, I get it. As traders, we should all be used to losing, don't you think? I think every single one of us should be used to losing. I don't think any of us should be adverse to that, because we take losses and we learn to lose. Yeah, shifting the time is annoying. We don't do that here in South Africa. We keep it the same, no matter what. So, here in Cape Town, like in winter, the darkness sort of ends quite late in the morning and starts quite early in the evening. And in summer, it's still light at 9:30 in the evening. So that's how it works. It works fine here. Hi, Elaine. Glad you're still here. You should really win an account, I think. Yeah, at the end of the day. Elaine's always here for the account. Quite frankly, if Sunny doesn't claim his account, maybe I'll just give it to one of you guys. We'll see. Okay. The deserving crowd. As David mentioned a bit earlier, I don't know how many of you guys actually, some guys are members, and guys weren't getting alerts as to the daily videos that are coming out. They do come out every day. If you are in for trade of the day and that sort of thing, do yourself a favor, just go and check out the main page and make sure that you've seen the video or whatever the case. It's always there. I put it out every day. I don't know why YouTube hasn't been alerting people to the videos. Just go and check. It'll be there every day. So just have a look for yourself if it doesn't come up. Yeah. So should you leave your job and become a full-time trader? That's a tough question, eh? How would becoming a full-time trader work out for you? Would it work out for you? Would it be a good idea? That's always the question, isn't it? Should I leave my job and become a full-time trader? David's still here as well. Lucas Adams, hello there. I met your channel on YouTube not too long ago. I don't know you got live, so what do you do on live transmission? Wow. Guys, what do I do on the live transmission? I don't know. What do I do? One thing I do is I talk a whole lot of rubbish. I just sit here talking and about trading. We're a team. We're a community. We're growing as a community, and we talk to each other, and we try and help each other. And I try and help you guys with your trading woes to get ahead. And I do a bit of training from time to time. Sometimes I will show you a little bit of a system or trading or whatever. Sometimes we'll talk a little bit about strategy, normally earlier in the video. At this point in the video, I'm already just rambling on and talking rubbish. But yeah, if you want to know about trading, that's what the live shows are for. What I don't do on my live shows, like many others, is sit here and take trades and boast about how much money I'm making and stuff like that. No, I don't do that. That's not my thing. Okay, so if you want that, then there's loads of guys out there with 5-minute charts sitting taking trades and, oh, look, I made $200 and that sort of stuff. That might be your thing. But if you're into learning and learning a little bit about trading and what's happening in life, then yeah, you're in the right place. That's who we are. That's who we are. And as I said, charts do not have a predictive capability. They do not have a crystal ball. They don't tell you where the markets are going to go. Trading orange peels on live transmission. We do. Thanks, guys. Yeah, I forgot. I trade orange peels. That is true. Rob will answer your questions about trading if he can. Yes, Kevin, that's true. I do answer your questions where I can, and I often will go over systems, and I will go over ways that you can trade and that sort of thing. And as Paul says, today I learned we can trade orange juice. You know, when I first learned we could trade orange juice, I was also crying in laughter. But yeah, believe it or not, we can trade orange juice. You can trade all kinds of things. It's amazing. You'll be shocked and stunned. And you know, there's lots of things that you can trade. IG offers a lot. If you're with IG, go have a look. You can trade bonds. You can trade the bonds. You can trade with IG. You can trade the VIX. The VIX is great. Just buy it at 15 and sell it at 30. Brilliant. You just have to hold it for a long time. What else? Yeah, no, there's so many things that you can buy and sell in the markets. Believe me, if it's thinkable, it's out there. It's tradable. Somebody's created a market for you for it. And like I say, no matter what you're trading, it's 50-50. You know, you're looking at a chart and thinking, ooh, should I buy that or sell it? Just buy it and sell it and apply the strategy, man. Apply the strategy. And like David says, I give good advice. So yeah, I don't want to toot my own horn, but yeah, I give good advice. Use it, don't use it. You know, what I try and do is give you guys a little bit of my experience, and you know, I've been through them all, and like I said, won and lost and won, and you know, it's good to be on the right side of things, but by the same token, just, you know, you need to know up front what you're getting into. Now, unfortunately, a lot of people don't tell you the pitfalls or, what you might be getting into and the difficulties of what you might be getting into. The end game is good if you can get there and if you can stick it out. But like any career, like anything you get into, like any business that you take on, it doesn't happen immediately. Even if you open a retail store, and I've had one or two of those, you don't open it and immediately you've got customers just rushing through the door. I guess if you've had 50 retail stores before that and you're opening another branch, that might happen because everybody wants the specials. But if you're brand new to the market, you've got a fresh name, nobody knows you, and you go and open a store of some note, the people aren't going to come banging through the door, and you're not just going to sell stuff on the first day like it's going out of fashion. You can advertise as much as you want, you can market as much as you want, you can get people in on cheap pricing and whatnot, but it's going to take time for that business to grow. It's going to take time for that business to pay for itself, to repay the loans that maybe you took to open it, and all that sort of thing. And the same goes for trading. You don't just walk in and boom, you're making money, you know what you're doing. It doesn't happen. It doesn't work like that. Never has, never will. So, to believe that's how trading is going to work for you, you kind of fooling yourself into a false sense of belief that this is going to somehow instantly work, and it never does. It never ever does. So okay, yeah. So we're shorting US dollar, Canadian dollar. So Shane says is shorting US dollar, Canadian dollar. That means we must be going long, eh? Oh no, we're shorting. You're right. Sorry, Shane. Actually, this time you're right. Go short. That's fine. It's okay. Go short. No, it's not advice. It's only good ideas to take on leave. Yes, Kevin, you're right. It's not advice. I don't give advice there. So do you use expert advisors? Any experience with bots? So Lucas Adams is asking me, expert advisors, experience with bots. You see, the thing about expert advisors, as I was actually saying earlier, you obviously weren't here yet, is with bots, somebody invented the bot. Somebody put the bot in. And bots aren't things that come out the sky. Bots are created by human beings. So the bot is programmed to work according to that human being's thoughts on how that system should work. And if they've programmed it correctly, then it will constantly do what it was being asked to do. The problem with a bot is it can only work efficiently in a relatively calm, straightforward market, a market that isn't seeing a lot of irrationality, a more rational market. When the market becomes irrational, which is more often than not, that bot can't trade. And what I mean by that is, in a rational market where everything is normal and everything is as it should be, then you can look at a chart and create an AI program to run a trading program for you based on what's happened in the past will happen in the future every single time. Because human beings are creatures of habit. What they did in the past, they'll do again in the future, because we're not trading against machines. We're trading against human beings. The trouble with that bot is when the market is irrational and it's doing what it's not supposed to, it's because somebody like Donald Trump is standing up and saying, oh, we're going to put tariffs in, and then 15 minutes later saying, oh, no, we're going to take them off. Oh, wait, we're going to go and attack Iran. Oh, no, we're not. And so it's kind of confusing, and your bot can't see that. You see, your bot doesn't know that. So what actually happens is you end up losing a lot with bots, because the bot can't see that, can only see the little charts. You see, charts don't have a predictive capability. They cannot predict the future. They can only help you to manage your trade. So a bot has to be designed in such a way that it can run the strategy for you and design your trade. You might as well do that yourself. And then if you see the world going pear-shaped, you can adapt accordingly. Get out of your stops early, whatever the case, when you see things going wrong. Whereas a bot's not going to do that. It's just going to keep on taking trades when you really don't want it to. You know, for example, let's say just before the weekend, you know, there's a huge problem coming up in the world geopolitically. There's going to be like World War III or something like that. So you, in all likelihood, psychologically, you'd say, I'm not going to take any long trades on any indexes here. But the bot's trained differently. And the bot's just going to go, take it, take it, take it, take it, take it, take it. It's just going to take those trades. And then you're going to be like, oh, wait a minute. And then you're just going to take all those losses. You see? So my thoughts on bots are, learn to trade for yourself. And the more you learn to trade for yourself, better off you'll be. If you want to run a bot, remember you're running on somebody else's system. And remember, it can't hear anything outside of that computer. Systems don't make you money. Win rates don't make you money. Actually, money is strategy. So expert advisors and bots, not for me, not my thing. If you want to use an expert advisor and it kind of confluences with what you're doing, that's up to you, because you still make the decision to take the trade. But what you end up doing with expert advisors as well is confusing yourself, confusing the issue, confusing absolutely everything. And it gets out of hand as well. It's actually better just to keep it simple and stay away from it all. Okay, cheers, Blue Mango. All the best. Ciao. I'm also shorting US CAD from 1.3746. It's a good short. Looks decent. Does look short, eh? Okay. Thanks for answer. I agree with you. Bots just do what they are programmed to do, like a machine. I learn a lot from your videos, Tiago Cash. Yeah, I wonder if we should just take a short on the US dollar, Canadian dollar. Do you think we should take a short here? It's already gone quite far. There's a head and shoulders. The head and shoulders has already played out. I missed this trade. Certainly missed this trade. I can take it for you guys, but I don't know if it's going to go all the way. But what the hell? Boom, 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 boom. Where do you want the stop loss? Ooh, the stop loss has got to be high. It's got to be at 137.6, 137.7. That's really far away. And the take profit is going to be at 135, 135.5, which is not good enough. The risk to reward's not there. That's not a good trade, is it? Actually, I can put the stop loss at 137.3. It'll be fine. I mean, if it goes there, it's done. It's profitable. 0.3. No, 0.4. Yeah, 0.4 lots. Okay, let's take it. Okay, got a trade in. It's almost 1-to-1, but what the hell? Let's see what it does. Okay. See if we get a decent trade out of it. So there you go. There's a trade. That's how you take a trade. You got it. Stop loss, take profit. You know, you don't always have to have a 2-to-1. This is going to be a 1-to-1 more than likely. Well, it's a little bit more than 1-to-1. You're going to make more profit on it than you're going to take loss. But you can always manage the profit if it gets down to this level. And yeah, that's okay. We'll go with that. And that trade can be in. Then there's a trade in. That's great. Okay. Hopefully it goes in our favor. Yeah. No, it's not too late. You see, sometimes you just go with the flow. It's not too late. I've taken the trade, but yeah, you know why? I do see that there is a level here, but it's pushing down hard. So I'm just going with the pushing down hard thing. It might go all the way down to here. So there's a good chance of that. Will it stop here? Maybe it'll stop here. Hopefully not. If it does, bad luck for us. But it does seem to be pushing down quite hard at the moment. I'm just going to go with that theory that it will go all the way down to the bottom here. I don't think it's too late on that one. How's my Brent crude oil doing here? It is going up, which is what I wanted it to do. So that's working out at least. All right, there we go. Okay, so that trade is in. Hey, hi Rob. Don't seem to really care much where you're getting the stop loss here to be in the right place. You see, hey, when you say that, I do kind of care where I get in. You know, obviously you want to get in the best possible place. But, I mean, obviously if it was at the top, I'd be much happier getting in there than in the middle. But it's all right. The thing is, once you understand and you realize that the market's 50-50 no matter what you do, and that you're going to make your money on the strategy, then it doesn't matter where you get in. What matters is that you manage the trade. Yeah, obviously, if I look at this trade that we've taken here, I look at it and I say, it would have been nice to be, get the trade up here. Obviously, it would be brilliant if you could get the trade higher up. But you can't always get that. You can't always get the best trade. But if you take a trade like this and it looks like it's going to run in the right way, which doesn't always do that. Every time you take a trade, by the way, it normally, 90% of the time, it kind of goes against you a bit in the beginning and then it goes for you. But, I mean, I don't mind taking a trade here and managing it. That's fine by me. As long as the trade is managed and managed correctly, that's fine. That's all we need. So yeah, I do care where I get in, but yeah, you're kind of right. It doesn't matter that much. What matters is that you manage the trade at the end of the day. That's the most important thing. Okay, you don't get a stop loss, you have to be in the right place. So yeah, we've had quite a decent session today, quite a nice session. It's been a lot of fun. I don't think I'm going to go over that much more. All I can leave you guys with today is think about what your main reason is for trading. You know, what's your main aim with trading? What do you want to achieve with trading? You know, go and sit down and think about that. Am I in it just for the money? Am I in it because I enjoy doing it, or because I need something to do because I'm retired, or whatever the case? Am I in it, to get some freedom and I don't want to work, whatever the case? What am I looking for? And because when you actually find trading is not just all about the money, and it's a little bit about enjoyment and a bit about maybe a bit of quality of life, that kind of also changes things a little bit for you as well in the psychology and what have you. If you're only stressing about money, it can become quite a difficult thing, because if it's only about money, it in all likelihood could hurt you and could come back to bite you. It's really something you've got to enjoy. I myself am addicted to it, a bit like drinking coffee. I've been addicted to trading for a very long time. I've tried to walk away from it once or twice and just say, okay, you know what, let me do something else, especially when you take the heavy losses. And then you always end up back. And then you have the good times, and that really makes you stay. So it's addictive. And for me, it's always been fun. I could just sit, forget about trading, and just leave the investments and just live off the investments. That's good enough for me. Be okay. But you still trade. Still trade. Still enjoy it. Still have fun. Why? I don't know what it is. It's like riding a motorbike. You just keep coming back to it and you keep on doing it. Why do I make YouTube videos? I got caught up in it and I enjoy it. Why? Who knows? I enjoy it. It's great. So, yeah, I suppose that could all change, you know. Somehow got nasty or something, but no, I love it. I love it to bits. I probably should have, if YouTube had been around 33 years ago, I probably would have been the biggest YouTuber around. I would have loved it. Admittedly, I did try playing around with it and dabbling it in the past and never really did much with it. I played around with it and messed about, but never seriously. This is the first time that I approached YouTube with a more serious plan. And yeah, let's make it work. Let's see if we can make this work and have a bit of fun. And yeah, now I'm addicted to that as well. So why? Who knows? But guys, sit down and think about why you're doing it. But make sure that if you're going to do this, make sure you're enjoying it. Make sure you're loving it to bits. Because if you're loving it, that's all you need. You're on the right side of the pole. You're on the right side. It's positive, and you'll probably be successful with it. If you're hating it, you're in the wrong place. And like I always tell you guys, with the risk, if you don't like risk, don't do this. You've got to enjoy the possibility that there's risk and you could lose. If you're scared of risk and you're scared of losing money, this is going to be tricky. So yeah, that's just a word from my side, you know, at the end of today, just to, you know, keep that in mind. Think about that. Just mull that through. I know a lot of you guys here are heavy into it and you're already addicted, so it's too late for that. And as Shane says, once you start chasing something, you're not going to catch it. And like Hey says, just trading is difficult, and it seems like the process of catching it. Yeah, no. Trader Tom is live, so you're going to go and enjoy that, guys. I would watch Trader Tom if he used dark mode. Yes, I like the dark mode too. Guys, I'm going to let you go and enjoy Trader Tom because he's interesting. I mean, he trades 5-minute charts and he shows you how he makes money. The explanation that the markets are 50-50 was a game changer for me. Thank you for your time and valuable advice. Guys, I want to thank you guys for actually being here. It's been great. Like I say, I'm not those guys who show you my trades and making money and all that type of stuff. We do this together so that you guys can learn. I'll see you guys on Tuesday again, and I'll bring out another educational video for you guys tomorrow that will be great for you, that you'll enjoy. I appreciate the community. It's really great having you guys here. It's good fun. As I say, trading's a lonely game, so it's good to have people around you. I'm not going to see you before the weekend live, so enjoy your weekend and make sure you make some money trading. Have a good time, and I'll catch you on the rebound. As I always say, keep your feet on the ground, reach for the sky, make lots of money. Chat soon. Cheers. Ciao.